Well, can this really happen? That somebody draws almost 8.5 lakh rupees every year and 84 lakh rupees over 10 years and pays only 2% taxes? Well, in today's video, I am going to show you exactly not that just how this is possible, but also how I have done this for my existing client. Stay till the end in this video as I want to show you exact calculations of how this can be achieved through an SWP, which is Systematic Withdrawal Plan, and what kind of returns can be generated using an SWP over a long time horizon. So let's get started. Now, before I talk about the exact numbers and take you through my dashboard, first I want to explain you what an SWP exactly is. Now, as the name suggests, SWP stands for Systematic Withdrawal Plan, which is in mutual fund a very powerful tool. There are other tools like SIP, STP and SWP that you might have heard of, out of which SIP is the most recognized one. Now, what SIP mainly means is that you can keep on investing money on a monthly basis, weekly or a daily basis. In case of an STP, you can shift your money from a debt fund to equity mutual fund or vice versa on a daily, weekly or quarterly basis. Now, talking about SWP, again as the name suggests, the purpose of SWP is to be able to withdraw money from your mutual fund portfolio at a set frequency. Now, this can be a monthly withdrawal, weekly withdrawal or a quarterly withdrawal for whichever date you set. So when somebody opts for an SWP, a fixed amount of money starts coming out from their mutual fund portfolio into their bank account on the date at which the investor decides. Now, this money includes the capital that you have invested and also certain part of the profits that you have generated over your principal amount. Now, I will show you in detail how this SWP exactly works, but just wanted to give you an idea of what SWP is and how the portfolio looks like on my dashboard. So let's take a look at the dashboard. As you can see from this dashboard, this is a client's portfolio who has been associated with us for more than 10 years now. There are some of these investments which are done for long-term investments, and this is mainly part of the retirement planning process wherein we have created two buckets for our clients. One is a growth bucket and other is an income bucket where this mainly SWP works at. Now, the main fund that I want to show you here is this HDFC balanced fund where we are doing our SWP from. Now, if you zoom into this and clearly have a look, we had invested somewhere around 1 crore rupees into this fund almost 10 years back, which is in the year 2014. We invested 1 crore and the current value of that investment today is around 1 crore 57 lakhs. So that means almost 57 lakh rupees worth of gain is still in this portfolio. But wait, there is one more aspect, which is the amount that you have already withdrawn from this investment, which is 84 lakhs. So we are doing a 70,000 monthly withdrawal from this portfolio, and over 10 years this has been almost amounting to 84 lakhs now. There are these other details which are not very relevant in terms of what are the number of units, what is the NAV. This we can definitely come to later on. Now, when you see this scheme, when you see the performance and everything, the main thing to focus here is the number of holding days of this investment. As you can see, there's a total of 3,600 days that this investor has held the investment for. Now, there are other mutual fund schemes also in this portfolio. I don't want to go into details, and we only want to focus on how the SWP works for this client. So let me take you to the Excel working of this transaction and download the Excel and show it to you. So as you can see from this Excel sheet, we already discussed about the name of the fund, the kind of lump sum investment we have done, the date of investment, and what monthly withdrawal through an SWP we are doing. So let's go into slight more details. The investment has almost completed 10 years now, almost 120 months, a total withdrawal of 84 lakh rupees. The current value of the investor's fund is 1 crore 57 lakhs. That means you didn't only withdraw the profits, but your principal amount also increased over time. The returns generated on this entire transaction of withdrawing money and also the appreciation of the principal is around 12% annualized, which you can see from this side. So how the SWP exactly works is, first you put in whatever investment you want to do, in this case which is 1 crore rupees. Once you have invested 1 crore on the date that you said, which in this case is 10th of every month, you will start receiving 70,000 rupees from your corpus. Now, we don't know whether the portfolio appreciated or depreciated because every month the market is fluctuating. So whatever your amount will be, a certain number of units are withdrawn from that amount to take care of the monthly withdrawal requirement. So in this case, the investor initially bought somewhere around 71,000 units. Now for removing 70,000 rupees, he had to withdraw 500 units. Then in next month, he had to withdraw 507 units. Now because the market went up, he had to remove lesser number of units, and similarly it went on. Now also one thing that you need to understand is, with SWP, whenever you are withdrawing money, there will be some kind of capital gain that arises. So for example, when the 70,000 was removed for the first month, there was actually a capital loss on the transaction of 700 rupees. The next month there was again a capital loss. Next month it was a capital profit. That means the market would have gone up, and that is the reason some part of the profit also came out. So on and so forth. If you can see, some places there is a capital loss, somewhere there is a capital gain. Now usually whatever you're seeing as capital loss, this only happens during the first few years of your SWP investment. So there's nothing to be panicked about. Now, the main thing that I want to bring your focus towards is, what is the actual capital gain in an entire year? This will help us better understand what will be the tax liability on such kind of a system. So over this 1 year, which is 12 months time horizon, if you see, the total net capital gain or loss was somewhere around 9,700. So the client actually had to take a loss of 9,700. And if there is a loss, we know that you actually don't end up paying taxes on any losses. Similarly, for the second year, if you see, we kept on withdrawing the 70,000 every month, and whatever units were corresponding to that. From what I can see, from the NAV, the market slightly fell, and again the market recovered. Now in that case, for some months there was a capital loss, and the other months there was a capital gain. So on an annual basis, there was an actual capital gain of 19,000 rupees. Now see, this is a very old portfolio, and most of you might not know that before 2018, there was no capital gain tax at all. So in reality, this client actually didn't have to pay any taxes before 2017. But I want to make this illustration for somebody who wants to do an SWP today and what kind of tax liability he might have. So as per today's regulations, somebody who wants to pay capital gain taxes, he is exempted for an amount of 1,25,000 for a financial year. So if your capital gains are below 1,25,000, you don't have to pay any taxes. And if it is above 1,25,000, then on the 1,25,000 you don't have to pay any tax. So in this case, let's say if you were this investor today, you actually would not have to pay any tax on this withdrawal also, because it is less than 1,25,000. Now let me take you to the third year. Now what happened in third year is, because the market kept on going up, you will not see any kind of capital loss for any of the withdrawal. Like I mentioned in the beginning, usually you will see a capital loss for the beginning years only. In this case, every month where there was a 70,000 withdrawal, some month there was a 14,000 capital gain, some month there was a 15,000 capital gain, for some month there was an 18 and 19,000 kind of capital gain. Now the total capital gain for the entire year was 1,91,000. Now what I told you, you have to look at how much is the amount in excess of 1,25,000. In this case, if you see, almost out of the 191, 125 will be exempted, and you only have to pay tax on the differential amount, right? In this case, if you see, the client would have to pay only 8,000 rupees of taxes on this 191 capital gains. Similarly, for the next year, the total capital gain arise was 2 lakh rupees, and on that 9,800 worth of capital gain tax was supposed to be paid. If you come to the year 2020, the capital gain was 2,19,000, and again the tax amount was very less. Why is this less? Again, I want to be very clear about this. Out of the 219, you have to first remove 1,25,000, which comes down to approximately 80 or 90,000, and on that 80-90,000 you have to pay 12.5%, which comes down to 11 or 12,000 for the next financial year. And we all know that what started happening after COVID, right? The market suddenly started going up. So you will start seeing more and more gains coming out of the portfolio. So the withdrawal is still only 70,000, but now the profit component of that is almost half. So when you are withdrawing 70,000, almost 30 to 35,000 of that is your capital gain. So if you see, for the next financial year after 2021, the total gain almost doubled. So earlier your capital gain was 2.5 lakhs, and now it is around 4.17 lakhs. On this 4.17, you end up paying only 36,000 as taxes. Similarly, if you come to year 2023, you will see that the total capital gain was 4,78,000, and the tax to be paid was only 44,000 on it. And if we come to the latest numbers, which is almost of the last month of December, if you see the total capital gains as of that day is somewhere around 5.7 lakhs, and the total tax to be paid will be somewhere around 55,000 only. So if you see from this illustration, the tax liability kept on increasing over the period of 10 years. And if I actually total it down, over 10 years, the client had to pay 1.8 lakh rupees as taxes. Yes, the total withdrawal over these 10 years is 84 lakhs, and the tax that was supposed to be paid on this 84 lakhs is 1.8 lakhs only, right? And the corpus has also grown from 1 crore to 1.57 crores. Now, if you simply see the total withdrawal and the tax actually paid against it, the percentage comes to only 2.18%. Isn't this almost magic, right? Because if the same kind of money you were to be received from any of your property or your FD interest, you would have had to pay higher taxes. But since this is the magic of capital gains and also the basic exemption that you get over the capital gains, this is how you can optimize your taxes. So the thing to learn here is that if you want to have a withdrawal strategy which is tax optimized, and if you want consistent returns and also good appreciation, SWP can be a very powerful tool for you. The SWP that I showed to you is one of the most proven methods, because the fund here used is a balanced fund, which is not a pure equity fund, neither a pure debt fund. That means your portfolio is always hedged for any kind of market volatility. I see many videos online wherein they simply sell you some kind of equity based SWP, wherein you can withdraw 8% and your portfolio grows by 15%, 18%. That actually doesn't happen in real life. If you have to do a hedged withdrawal strategy, and if you have to optimize tax, take care of volatility, going through a balanced fund or going with a balanced strategy wherein you can have a pure equity fund or a pure debt fund is the best route for you to go. Now, if this was too much numbers and if you find this slightly hard to digest, I am happy to get on a call with you if you want specific help for SWP planning. If you have any amount lying around, or let's say if you have parents here in India for whom instead of sending money every month, you want to set up a corpus and start an SWP for them, I am happy to help you. So I hope this video was helpful for you, and anybody who is looking help for SWP, feel free to reach out to us. You can directly book and schedule a meeting with me with the link in the description below. Also, you can reach out to us on our WhatsApp number, which will be displayed on the screen. Thank you, and I'll see you in the next.